Hello, welcome to episode 36 in our Navigating Turbulent Times webinar series. I'm Jenny Thomas, Head of Marketing Communications at IWFM. For this week's session, we've teamed up with our friends at Make UK. Now they're champions of UK engineering and manufacturing, and we're going to bring you together the first of 3 briefings, each one focusing on a key change to the business and legal operating environment in 2021. The change we focused on today goes by the slightly obscure name IR35. Now, as a highly contracting sector, we thought this would be a really good one to cover. IR35 comes into force this coming April, and it's an important one to know about for anybody involved in engaging contractors, not on the organisation's payroll, or for anybody who provides services to an organisation using their own company. That's as far as I'm going to go in trying to describe what this is about, but I'm absolutely delighted to be joined today by solicitor Sarah Brett of Make UK's legal team, who knows all about IR35 and is here today with us to give us an intro and an overview of the rules, what's changing, what it all means, and crucially, how to get more help. Before I hand over to Sarah, just a quick reminder that we'll take questions at the end, so feel free to post them in the chat as we go along. And Sarah, welcome to IWFM, and over to you.
Thank you, Jenny, for that warm welcome. I'm delighted to have received this invitation to come and join you and meet you all virtually. So today we're looking at the topic of IR35. And for those of you who are thinking, oh goodness, what have we committed to? An hour's precious time dedicated to what could potentially be a very boring topic. I hope that this will not be the case, and you'll see just how relevant this topic is to your situation, and that you'll find it a very practical, fun time. So why is IR35 such a pertinent topic today? Well, you only have to look at newspapers, etc., to hear that tax fraud is big news. So over the weekend, when I was lying in bed listening to Radio 4, it was on the news about how Hmrc are being criticised for not pursuing those overseas companies who sell into Amazon and eBay without charging VAT, and how that's undercutting sellers in the UK. And Hmrc say, oh, well, we're so busy chasing up on those awful companies who are abusing the furlough scheme. So Hmrc have been very busy on that. But for a longer period of time, there's been a lead up to this particular topic. It was all meant to be coming to fruition back in those heady days of April 2020. But actually it was delayed for a year by Hmrc because of the acknowledgement of the challenges that we're all facing because of COVID. But actually, IR35 was introduced to crack down on a particular issue of perceived tax avoidance, where individuals would seek to avoid paying employee income tax and national insurance contributions by supplying their services via an intermediary and paying themselves a dividend. So this whole topic, IR35, is about what tax contractors should pay so that it's fair, and who should cough up if the wrong tax is paid, who should have liability for that. So without further ado, Annie, thank you very much. I think you're going to take us on to our first slide. Okay, so let's understand the current situation. I'm sure many of you have heard this term IR35 before, and actually it has been around in the public sector for a little while. Now, the two terms IR35 tax regime and off payroll working rules are used interchangeably, so you don't need to worry about that terminology. And the aim, as explained in that middle bullet point, is to ensure that individuals who work through a personal service company, I'll explain that in a minute, who would have been regarded for income tax and national insurance contribution purposes as employees if they were directly engaged by the client, paid broadly the same income tax and national insurance contributions as if they were employed. So you're already thinking probably, oh dear, this is so dull and boring. But no, think back to Lorraine Kelly and Krista Ackroyd, both of them familiar faces on the television. They both set up limited companies to provide their services to the two TV channels. They were both doing roughly the same type of work, and they'd been led to believe that they would be genuinely self-employed if they used a personal service company to provide the services to the TV channels. But actually, and that is what a personal service company is. It's a limited company whereby typically the contractor would be, say, the sole director, and then they pay themselves in dividends so that they save on tax. So Lorraine and Krista both had these limited companies, and Hmrc went knocking on their door saying, oh, we don't think you've been paying enough tax. Is this just a fraudulent scheme to cut down how much tax you have to pay to Hmrc? And these two cases went all through the tax tribunals, and actually they came out with very different outcomes. So this gives you an indication of why this is a challenging topic, whether you're an end user company who maybe has existing arrangements with contractors who work through limited companies, or whether you're actually one of the contractors who has your own limited company. Because the current rules are that it's always been the contractor's responsibility to ensure the right tax is paid. But as we will see now on the next slide, what we're changing to is that from 6th of April 2021, it's actually going to be the end user in the private sector who is responsible for making sure that that actual contractor operating via their limited company is paying the right tax. Now, you may ask, why have Hmrc bothered making this change? And the key point is they've decided they need to find more money. Clearly, at the moment, they're in need of all the tax they can get. So they've decided they'll go for the end user as being liable for deciding the right level of tax to be charged in any situation. And that, I think, realistically is on the basis that it tends to be the companies who use contractors who have the deepest pockets. So what is changing? We know that it's the client or end user who is going to be responsible for deciding whether the individual is genuinely self-employed or whether they should be a deemed employee for tax purposes. And if IR35 applies, then the end user may be required to account for tax and national insurance contributions before they actually pay the personal service company the money. So if they're in the example of Krista Ackroyd, who was found to be a deemed employee, she could still retain her personal service company, the limited company, for providing her services to the TV channel. But before ITV paid her for any given services, then they would have to make sure that they deducted employer national insurance contributions before she saw the colour of her money. And it would be paid under PAYE. So those of you who are here representing companies, and I understand that many of you will be SME companies, you may be thinking, oh, now, do you think we could get into what is known as the small employers exemption, so we don't have to worry about Hmrc coming after us if our contractors haven't paid the correct tax? Now, on first sight, this exemption looks pretty easy to satisfy. You do have to get 2 ticks in the boxes to say not our problem Hmrc, but so that you would need to satisfy 2 or more of these conditions: turnover of not more than 10.2 million, balance sheet total of not more than 5.1 million, not more than 50 employees. The problem, and why lots of companies are still having to comply with the new rules from 6th of April 2021, is that if you're part of a larger group of companies, then as a subsidiary, you don't count as being small if you're part of a larger corporate group. So what I found when advising our members at Make UK is that many of them think, oh, great, we can tick 2 of those boxes to say we're a small employer, but then they think, oh, but actually we are part of a larger group, so we will have to still take the responsibility for complying with this new law. You'll see the bottom bullet point there. It says clients and end users of these contractors, that it means the same thing, must respond to requests for confirmation of size. So some of you who are contractors yourselves with your own limited companies may be thinking, oh, that company that I provide work for, I wonder whether they're bound by this, that it won't be my lookout anymore whether the right tax is paid, that it will be the company I provide the work to that Hmrc will come knocking on the door of. In what you can do as a contractor is send a request to a company, and they have to respond within 45 days to find out whether they are bound by this new law. So do they fulfill the definition such that from 6th of April 2021, it's their responsibility for determining whether IR35 applies. Great, thanks Annie. If we can move on to the next one, please. So hopefully you're getting a feel for this now, and your minds are racing ahead thinking, okay, so when does IR35 apply? The first point is this new tax law, IR35, in terms of the end user being responsible for determining status, only applies when the individual, the contractor, provides services via an intermediary, and that's usually a personal service company. So Lorraine Kelly, for example, she had a limited company that she used to sell her lovely image to the TV company and her services. So it's only in the instances that there is that limited company. It also applies where the individual personally performs the services. So that's so it has to be via an intermediary, and it has to be about personal service for the client. So you might, for instance, contrast the situation where a company has a statement for services with an IT company. Now that is outside of IR35. If it's not about a individual IT contractor coming in and helping out your company, but it's more about the fact that you have now entered into a service contract with a particular IT company that provides services, and you know, a whole team of IT people will be taking on responsibility for example, the outsourcing of your IT service. So it's about, there has to be a limited company, it has to be about an individual personally performing the service. The contract has to be with the limited company. So say my company, Make UK Limited, if we had an HR advisor who set up their services, then this legislation would apply, because we would contract with the HR provider's limited company, the PSC. And the IR35 consequences kick in where, if the individual had contracted directly with the client to provide the services, the individual would have been an employee of the client for tax purposes. So those are the four main tests always to bear in mind. So if you've got a contractor who's got a limited company, this doesn't apply where there's no limited company involved. As I said at the beginning, this is about sussing out those situations where people are using a limited company as a sham to avoid paying the right level of tax, because otherwise they'd be an employee. So if you've got that situation, this is what you've got to start thinking as end user. If it weren't for that limited company, would they really be an employee for tax purposes? Okay, thank you, Annie. Let's move on. So we've said the new rules apply from 6th of April 2021, and this does apply to ongoing arrangements with contractors. So those of you from companies where you do regularly still use contractors, notwithstanding the current economic conditions, you do need to be doing an audit of which contractors you've got, because it does apply to existing arrangements. But the new rules in terms of liability and whose job it is to make sure that the right status is accorded to that contractor, that kicks in if payment is made for those services to the limited company on or after 6th of April 2021, and the services are provided on or after 6th of April 2021. So you may find that you've got, say, a couple of scenarios where it's an existing contractor, and then you have to kind of pro rata whose responsibility it is to suss this out, depending on whether the service is provided before or after 6th of April, where it's an ongoing arrangement. But just bear in mind that general rule and you'll be fine. Okay, so how does the poor end user, the company, go about deciding whether the individual would be an employee if engaged directly by the client? If this were easy, then I think I may as well go home today. It's not easy, and this is where my company, Make UK, is providing a lot of support for companies, because, as you've probably guessed, there is quite an overlap here between tax law and employment law. And actually, although this is all about tax IR35, the tests that they are using to decide whether somebody is a disguised employee for tax purposes is all kind of based on employment law tests. So those of you who've had experience of HR or employment law, some of these tests that we're going to run through quickly, they will be very familiar to you. But what is happening is that Hmrc are really upping the ante here. They want to get as much money as they can from these situations. So as we go through the various tests, you'll be able to see there is quite a contrast to what people have got away with in the past compared to the expectations now to show that somebody is genuinely self-employed. So one of the difficulties is there's no single test for deciding if they would be an employee if taken on directly. It's all well and good having the most fancy paperwork, but it's what happens in practice is the key. So those of you who have maybe contracted yourselves over a number of years will be used to having some really whizzy paperwork that says, for example, oh, I can send along a substitute contractor, or yes, I do take responsibility for having my own insurance. But in practice, if you sent along your mother-in-law instead of yourself to any given client, you know that that client would be in absolute uproar, thinking, gosh, no, we contracted with that very specialist contractor because we liked their skills and we didn't have anybody else in the organisation with that unique skill set. So they would be horrified if you, in practice, exercised your right of substitution. But from my knowledge of, up until this year, 6th of April 2021, many contractors already have that written in their paperwork. But what Hmrc have said is from 6th of April 2021, it's not enough just to have that in your paperwork. What you have to evidence, and in most instances it's going to be the client end user having to evidence this, is that that right of substitution has been used in practice. So that's one example of what's happening in practice, why what's happening in practice is key. Okay, thanks, Annie. If we can move on, please. So these are many of the tests. So we've already talked about substitution. Obviously, the more akin to a standard employee relationship it is, where it's very much about personal service, the less likely it is that somebody is going to be able to prove they are genuinely self-employed. Then there's the issue of supervision, direction or control. For somebody to just be taxed as genuinely self-employed, notwithstanding their personal service company, they're going to have to prove to Hmrc, and from 6th of April 2021, it's the end user who's going to have to have all the paperwork to prove this, because that actually there's very little supervision, direction or control exercised by the end user, that they are the real expert. And yes, okay, there may be some touch points because most organisations, employers, if they're providing a service, have to make sure it's done properly. But really, the essence of being genuinely self-employed is that you use your own expertise and there's not much supervision by the end user. The next point, mutuality of obligation. This is a really important one. As we're going to see very shortly, the government has introduced a checking employment status test that employers can use to find out if somebody is genuinely self-employed or not. There's a government website, and if you Google checking employment status test, you'll come up against this long document. You go through a series of questions. Unfortunately, Hmrc left out this critical test about mutuality of obligation from their tool. It's a slightly clumsy tool to use, the government one. So, for example, Make UK, we've provided our own tool to assist end users, which is a lot more kind of practical and user-friendly and can be used to supplement the CEST government tool, but we have included the test of mutuality of obligation. What that means is if somebody is an actual disguised employee, then it means that there will be a high expectation that if the end user client says, come and do this bit of work, that they'll have to say yes. So if somebody, in contrast, wants to say that they're genuinely self-employed, then the end user wouldn't be able to just kind of suddenly say, oh, we're shifting you onto this new project. So it becomes really important how you evidence this in the paperwork and in practice to demonstrate that somebody is genuinely self-employed. The next point is financial risk. So up until 6th of April 2021, end users have been able to be quite lax about who bears financial risk if projects start to overrun or the contractor perhaps doesn't meet critical milestones, that kind of thing. It's been more acceptable that the contractor still gets paid their normal pay rate. But going forward with this new law, it's going to be really important, and it's one of the questions you get asked when you do the government checklist. Does the contractor bear financial penalties for getting behind? It's because you would expect that more if they're genuinely self-employed. Next point is degree of integration into the business. You need to be careful about giving them company email addresses if you want to say they're genuinely self-employed. There may be some of you who say, representing companies, end users, well, we have to do that, the clients expect it. If you do have to give them a company email address, still make sure that they have very clear on their job title that they are a contractor. You shouldn't be giving people who are genuinely self-employed titles within your organisation. They shouldn't be directors. You shouldn't give them the hat of being data protection officer, that kind of thing, because that would indicate they're integrated into your business, that they are actually a deemed employee. Then there's exclusivity of arrangement. If you're genuinely self-employed, it's going to be more likely that you're doing different pieces of work for different end users at any one time. Provision of equipment. Mostly, if you're genuinely self-employed, you're expected to provide your own tools for carrying the work, in contrast to deemed employees. Some of you may say, well, our industry, we have to be very security sensitive. Even contractors have to use our laptops. So if you do find yourself kind of going against the grain in terms of what is typical for treatment of genuinely self-employed people, it's really important that you audit the reason for doing that. And again, my organisation, with the checklists and additional paperwork that we've created to assist end users, have ways that that can be documented, so that should Hmrc come knocking on your door saying, well, why are you providing laptops to genuinely self-employed people, you've got a way of evidencing the exact reason for that. The next one is form of payment. Up until this juncture, it's been typical for contractors to be paid hourly, daily rates, that kind of thing. But if you want to increase the likelihood of them being genuinely self-employed, it's better to say that they're paid for a particular project, and to kind of use the language more of statement of works, that kind of thing. Thank you, Annie. Moving on. And the other one that I would just say before we look at this worked example is be very careful about not giving benefits to genuinely self-employed people. When you do the CES test, if you answer yes, that you provide car parking to a contractor, for instance, it immediately says, they're a deemed employee. So your contractors who are genuinely self-employed should not be given any kind of benefit. Okay, so you're now saying to me, right, Sarah, we've got a bit of an idea here now about when somebody's likely to be genuinely self-employed and when they're likely to be deemed employee. What does this actually mean? So we've got here a worked example. If you are a contractor currently, and this is based on getting 100k of gross income, if IR35 applies and you're a deemed employee, by the time income tax, employees' national insurance has been taken off, this is the right-hand column, you only walk away with 66k. Now that is significantly less than what you walk away with if you can prove that you're genuinely self-employed using that limited company, because you'll see that first column, the tax rates are so much less, you know, the tax due on dividends so much less, that if you look at the difference, it works out as 20k. So perhaps you're beginning to understand now why these conversations with contractors, whether it's you as end user or you as the contractor, are going to be very delicate, because if you as the end user decide somebody isn't genuinely self-employed, you know, maybe you've been using them for so long, treating them almost like an employee that you think we couldn't hand on heart fill out that CES test and say that they are genuinely self-employed, then what you're essentially saying is, sorry contractor, you're going to be 20k down on what you normally get. That's based on that particular example. So for the contractor, they lose out significantly on what they take home in their pocket. And also for you as the end user, you have increased liabilities if they are actually a deemed employee, because you might need to take a tactical decision to keep a certain very valued contractor and make good the difference in that, say, 20k in that worked example, or go halfway. That might be the case if in your industry it's really hard to get these people with these specialist skills. So there might be that, but also you're going to have to budget for national insurance deductions as employer. It may be that now you have to include them with apprenticeship levy if that applies to you as an organisation. So actually, by the time you've considered all that, it typically equates to 168k for an end user to say somebody who's on 100k plus VAT is inside IR35. So that really is quite draconian in terms of extra expense for the end user and for the potential loss of income for the contractor. Okay, Annie, thank you. Let's move on. So I've already told you that there is an online tool that Hmrc have created to assist end user employers in deciding what they think the status is of any given contractor. So the aim is to help the hirer, the end user, decide whether they need to apply the new rules and pay the employment taxes and national insurance contributions. I would be wrong to pretend to you that it's a lovely, easy experience using that online tool. It can be very frustrating when you use it for the first time. It doesn't tell you in advance what the questions are going to be, so you don't know what paperwork of background facts you need to have collated before you start using it. Again, Make UK has come up with a tool that we give to our members, which sets out exactly what the questions are in advance so that you know that. You have to be very careful not to let the system pause without using it, because it boots you out after 20 minutes and it doesn't save your previous answers. And it is really quite a lengthy tool to go through. And then what's even better, at the end of it, you've complied with your duty to use reasonable care in answering all these questions, because that is critical to this. And you know, you've got all the answers from the line managers, etc., and sorted it all out, done a beautiful job, fed in all your answers, and then it says, oh, the CESS tool is unable to provide a determination. So that does sometimes happen, but then you just have to make your best informed view as to what is the appropriate status, whether you think they're genuinely self-employed or whether you think they're inside IR35 as disguised employees. Hmrc say if you print off that outcome from the government tool, then you can rely upon that. Should Hmrc come knocking on your door saying, prove your status, prove your decision here. Thank you, Annie. If we can move on. So now you understand whose liability it is to decide the status, how you do it using the government CESS tool. Now you need to understand how you communicate what you've done. So another really important part of this new IR35 law is that it's the end user, the company's responsibility to give what is called a status determination statement to the party it contracts with. So in the case of ITV, they were contracting with Christa Ackroyd Limited Company. So they'd have to give a copy of the status determination statement to that limited company and to the individual worker, to Christa Ackroyd herself. Okay, so this, and you're probably saying to me, well, what is a status determination statement? What it is a letter saying we think that you are inside IR35 or outside IR35, and most of the companies that I'm advising will actually print off their copy of the government CESS test to explain the reasons for the conclusion as to whether they think somebody is genuinely self-employed or a deemed employee. So we have letters, again, standard letters that we sell that can help you with that, but it is just a simple duty to say what you think the result is and the reasons why. Then, as I've said previously, it's no good your line managers, if you work for a company, just, you know, being quite careless about how they feed in the answers and, you know, forgetting to mention that canteen subsidy that you give to the contractor, which would mean that they immediately fall into the let's get some more tax out of them category. They're a deemed employee. You have to exercise reasonable care when you answer the questions on the government assessed tool, and when you fill out your reasons for the status determination statement. Things can get very tricky when there are other parties in the chain. If you have decided that you will take up an agency's offer to take care of this for you, so that you don't have to worry your pretty little heads about IR35, then you really need to prod whether the agencies are fully complying with this, because mostly the liability ends up back with the end user. So it's only really where the agency are taking responsibility as the next party in the chain for deducting the correct tax for the person to be a deemed employee that you can sleep easy at night. With the status determination statement, that first bullet point where it says given by client to the party it contracts with, sometimes if you've got an agency, your direct contractual relationship will be with the agency, who then contracts with the limited company and the individual worker. So in that instance, you give a copy of your determination statement to the agency and to the contractor, and then the agency has to pass it on to the limited company because they're the paying party. So as I've said, very often, and I would say 9 times out of 10, liability for not carrying out these processes, not carrying out the correct judgment in terms of status, will end up with the end user company. It is going to be contentious what you come up with as outcome, particularly if you're saying a contractor is a deemed employee. So as well as having a process for issuing status determination statements, you also have to have a process as an end user for handling any disputes. So if the contractor says, I disagree with what you've said, I'm not a deemed employee, didn't you know I have these 3 or 4 other clients that I'm providing advice to, and no, I've never taken advantage of your company canteen subsidy, I think I'm genuinely self-employed. It's the end user's responsibility to hear that dispute within 45 days. You keep the status that you originally said they were, all whilst you handle that dispute. But most companies now are developing a dispute policy pretty similar to a kind of grievance policy that you've already got. And again, we've got precedent ones of those should you need them. How to pay, this is one more detailed for those of you who are in payroll. So the deemed direct payment is the amount paid to the worker's intermediary that should be treated as earnings for the purposes of the off payroll rules. So if your payroll is saying to you, oh, now you've told us about this IR35 stuff, what does it mean in practice? What they have to do is work out the value of the payment to the worker's intermediary, having deducted any VAT. They deduct the direct costs of materials that have or will be used in providing their services, deduct expenses met by the intermediary that would have been deductible from taxable earnings if the worker was employed, and the resulting amount is the deemed direct payment. If it's nil or negative, there's no deemed direct payment. You then, as the paying company, need to deduct tax, employee national insurance contributions, and you also need to pay employer national insurance contributions. And then you need to report the pay and deductions you make to Hmrc using a full payment submission as you do for workers on your payroll. So most of the payroll people that I've been talking to have said that what they'll do is they'll have a separate payroll for deemed employees for tax purposes from their regular employees. Okay, Annie, thank you. If we can go on. So coming towards the end here, what does this mean for your business? So clearly greater risk if you fall into this regime. It's your responsibility to make sure you're happy what their correct status is. There is going to be more administrative burden, you know, just payroll, for instance. You need to check whether your software is up to it. There's going to be increased costs if they should actually be deemed employees for tax purposes. It means at the very least you're going to have to start paying employers' national insurance contributions. Certain contractors will demand higher pay because they'll be unhappy that they're going to walk away with less money than they have done pre-6th of April 2021. And it will be a strategy decision for your company how you want to play that. Some companies are just saying, no, tough. You know, we're not putting any extra money into the pot in terms of your rate, like it or lump it. That's the message they're giving contractors. Other companies are kind of looking around, seeing what their competitors are doing to hold on to contractors, and you know, entering into meaningful dialogue to the contractors and finding individual solutions. And then finally, we've got potential increase in tax avoidance schemes or non-compliant intermediaries. Hmrc can come after you for a period of up to 6 years for any breaches in this from 6th of April 2021 onwards, and there can be fines for end users if companies are found to be non-compliant. Speaking to Make UK's member base, we've got, you know, SMEs and quite a few multinational companies, and I think their main concern is reputational risk. Nobody wants to be made a guinea pig on this particular new regime, and you know, kind of flagged up as an example of what happens if you don't get your house in order. Okay, Annie, thank you. That's lovely. Next one. So just to sum up, we've got some great tools that we can help you with, and if you've got any queries, you want support in this, then that's the email address there, Nicola Kibble. If you say that you heard about our organisation through IWFM, then we'll do our best to assist you. Thank you. Thanks, Annie. Next slide, please. Okay. Your questions.
Hello again. Sarah, thank you so much for that really comprehensive overview of IR35. And you may imagine the questions have been rolling in as you were speaking. So, and we've got some really cracking ones here. So I'm going to start off with Sean Sweeney. Now, Sean has asked a really good question, actually. What about sole traders completing or competing to provide services, for example, repairs or refurbishments? Because you spoke about limited companies, but obviously a lot of people provide their services as sole traders. So can you just explain to us how they are treated under this regime?
Yeah, so if the sole trader enters into a contract for services in their own name, so say it was Sean trading as Fix Your Appliances, then the contractual relationship between the end user and Sean would be direct, and Sean would be a direct contractor as a sole trader. So this new IR35 stuff wouldn't be triggered. because it's a direct relationship with the contractor. There isn't actually a personal service company as an intermediary. So it's really important to remember that, for instance, if it's a school who has a music teacher who contracts as a self-employed person and comes in as and when required as a sole trader, as a music teacher who doesn't have a limited company, none of this new stuff is applied. In that situation, it's the music teacher's responsibility, their responsibility to make sure they pay the correct tax according to their status. It wouldn't be the school's problem, and the school wouldn't have to be doing status determination statements and all this new stuff.
Thank you very much. So Sean, I'm not sure if that's good news for you, but it sounds like it might be if you're a sole trader or you're working closely with them. Now, Charlotte Payne's got a really good one too, Sarah. You mentioned supplies in this, and let me just read out what she says here. So, as an end user who contracts with large FM service providers, who in turn will have contracts with multiple subcontractors, some of whom might be self-employed, does the liability sit with myself, with Charlotte, or the FM service provider?
So it's about the ultimate end user. Yeah, if she is the end user, which it sounds like it is in that scenario, then it is going to be Charlotte's responsibility. We have had some queries about this because it will always turn on the individual facts of that situation. But a simple answer to it is it's the end user. Yeah.
Thank you very much. Now, Enitan Page has written in with a very specific question relating to your example. So I'm going to read this quite slowly. And Enitan, I hope I get this right. So your example around the 20k difference, I'm assuming that's the bit you talked about in the worked example, is based on shared family dividend and doesn't take into account that the other person may have another job. For balance, what's the difference if the dividend is not shared to the contractor? Is the impact the same? You might need to get your calculator out on that one, Sarah.
Yeah, I can't answer that in terms of the maths of the example. And, every scenario is going to be slightly different in terms of what the financial difference is. But the general message is it is a significantly lower sum that the contractor takes away if they are found to be a disguised employee rather than genuinely self-employed. Now, it may be the case that those of you who are contractors on today's webinar have already got ahead of the game. And even though you've got personal service companies, limited companies that you operate, that you are already paying the correct tax through those limited companies. So if that's the case, then that makes everything a lot simpler for the end user, because you can say, well, we're already paying the equivalent of pay as you earn. And it may be that some of you have already looked into providing your services via another company. Like there are managed service company agreements, that kind of thing, and already paying the right tax. So if an umbrella company, a managed service company that you're operating through is already deducting correct amount of tax for your status, then obviously this new law is much less of a worry for you. Okay.
Thank you, Sarah. They really are rolling in. So I'll try and get through as many as I can because we've got some really good ones here. So James Haggerty, he asks, if payment is being made against milestones and outcomes, where the contractor is taking the risk, on what input is required to deliver the outcome milestone is this off payroll. I'm not sure I understand that. I think what he means is it all in that contract, or is any of that off payroll if they don't deliver it, I think is what he's saying there, James. I hope I haven't butchered your question there, but perhaps we can come back to it if I haven't understood that completely correctly. And then there's one from Kevin Cal. Is there a threshold of the hours worked for a client which then deems you out of IR35? That's an interesting one.
And the answer is no, there's nothing set in stone, no thresholds. So it obviously helps if you're working for more than one client at any one time. It helps you say that you're genuinely self-employed, but these IR35 obligations on the end user will kick in even for the scenario of a contractor just providing 1 hour's service through an intermediary limited company. So yeah, you're right, actually, it's a good question. You know, this is a real administrative burden for any end user where you know, they fall into the regime because they're not a small company, and they've got an arrangement even where it's just, you know, a couple of hours a week with a limited company. Yeah.
Interesting. Now I've got one, probably final one. Francesco Fiore's asked a couple. Let's just get through one of his, and then perhaps we can just come back to it on the chat. So Francesco asks, who is the responsibility to identify an intermediary for the purposes of managing the off-payroll obligations? So whose responsibility is it to identify an intermediary?
And that's the end user's responsibility, the company who has got the contractor providing the services. So this is why training your people in how IR35 works is really key to this, because it's a bit like the topic of data protection, in that you can't just have one person in your company understanding this topic. It doesn't fit neatly into HR, doesn't fit neatly into procurement, it doesn't fit neatly into payroll, it doesn't fit neatly just into management. Everybody needs to understand what they're looking out for. We deliver this training in-house so that we can really kind of get alongside our companies and understand their particular risk factors. And what we tend to find is that it's only having had the half-day workshop or whatever that our members suddenly say, oh yes, well, we've got a line manager who just goes off and does his own thing and enters into arrangements with contractors. And oh yes, well, he did mention that there was a limited company, but that's not IR35, is it? And so you need to make sure that all your people understand the significance of this IR35 topic, because very often scenarios that you wouldn't think are governed by this are in practice. So everybody needs to be kept in rein when they're kind of, you know, procuring people to carry out tasks for the business, so that you don't go into this unwittingly.
Indeed, indeed. We've got more questions than we can possibly get through, I think, today. But so let's leave the questions there. Thank you so much, Sarah. You've very, very kindly agreed to respond to some of the questions that have come through, and some of them are quite specific, so I think they're probably better actually looked at separately. So we'll gather those in. Hopefully we won't pass you too much follow-on work from this, but it's very kind of you to agree to respond to that, and thank you so much for a really excellent run through IR35. Now I've got a couple of short notices to get through just before we go. familiar watchers will know that I'm always saying, don't forget the IWFM Insight Hub, which is jam-packed full of info and research and the latest good practice guides. We've also, Annie, got a special section on our website where we keep our coronavirus resources, so check that out for the latest info and guidance. And our Outlook survey is in the field. It closes on Friday. We've had tons of responses to it, which is absolutely fab. So if here's a last chance just to fill it in, help us build the best and most comprehensive picture of what's going on in this crazy year in the industry. It would be really great to fill it in. So just search Outlook survey on the website and you'll get directly to the link. We will return with 2 more really excellent webinars from the Make UK team before Easter. So in 3 weeks' time, on the 10th of March, we'll cover EU travel and the right to work. Obviously, we can't travel for work much at the moment, but once we can, it'll be really good to know what the rules are now that we've left the European Union. So get that in your diaries and look out for further details on the website. And of course, we'll be back next week, same time, same place, where our workplace experts panel will be discussing the brand new guidance we're publishing on workplace optimization with our partners RICO. So do join us then. Until next week, thank you so much to Sarah and the Make UK team. Thank you to all of our listeners. Keep sending questions in, keep telling us what you want to hear on this channel in the chat, because we do look at it every week. Please, I know one of our questioners said, can I get the video? Yes, you can. It's on the website. Listen again, share it with a friend. And from all of us at IWFM, have a great week. Bye.